Hi everyone, Jonathan Wu here from SWU Openinvest with our June 2023 portfolio updates. So after a strong rebound in Q1 2023, China's recovery has slowed due to a lack of stimulus from the government. That being said, the valuations remain very attractive for Chinese equities. Based on historical data, Chinese equity market performance actually gathers strength between the third and the fifth plenum meetings, which is actually set to occur in Q4 this year. So it's really a matter of patience and investing based on fundamentals. Even though Australia took a pause in raising rates in July, it is still widely expected that further rate rises are to come as the RBA seeks to bring down inflation to its long-term target of 2 to 3% by late 2025. The committee continues to look closely at consumer spending, as is the RBA, and when that actually tips over, we will clearly see ripple effects to corporate earnings as well as an uptick in unemployment. On the back of this, one area of potential risk in investor portfolios is commercial property. Given the increased levels of working from home, as well as increased online retail activity. Historically, the listed market moves faster than the unlisted market, as you can see here. So investors really need to consider and prioritize quality over growth in the current environment. Tighter lending standards also remain a headwind for growth as corporates are unwilling to invest further given the uncertain backdrop economically. The committee expects volatility to remain reasonably high given the uncertainty over the global battle for inflation. Investors should be prepared to expect longer-term interest rates to remain higher, and rate drops won't occur for a while. If we consider Australia, we are probably likely to see interest rates actually probably fall in the latter part of 2024. We also expect, much like the first half of 2023, the second half will continue to be a test of patience for investors as markets eagerly await confirmation of recession in major economies, including the US as well as Australia. In saying this, a well-diversified portfolio of global equities and fixed interest actually outperformed cash in the first half of 2023, and we expect it to continue to do so for the remainder of the year. So for the month of May 2023, the balanced beam portfolio performed negative 0.95%, over 3 months is up 0.5%, and over 6 months is up 3.64%. With regards to May, overall it was a risk-off month, and most people who have been through a number of investment cycles have seen that the month of May generally we see weaker returns. A lot of people say go away in May and don't come back again till around October. So in that environment, given the fact that the way that this portfolio is constructed as a balanced beam of both risk and defensive assets, being only down about 1% versus say something like the Hang Seng Index, which was down over 8%, the performance has held up quite well. With regards to that portfolio, the investment community has decided to maintain the portfolio, and we believe it is well diversified and the defensive portion of the portfolio is performing in line with expectations.